If you look at those stocks from Globe, from PLDT, from REIT, from Meralco, and even SPC, all those five have gone up significantly from where they were in 2020, 2021. They're a bit higher already today. And since they're a bit higher already today, that actually means that your dividend yield would suffer. Hey guys, so let's talk about dividend stocks in the Philippines. I think this is something that's very interesting because, as you all know, I'm a very big fan of dividend investing. I'm a very big fan of getting passive income for life. And what's nice about dividend investing is that it removes the fuss. And as you all know, I've been a very big fan of the cryptocurrency market, and a lot of time and attention, for me at least, is there. I still want to be invested in stocks. I still want to be positioned in quality companies that I know will be here for a long period of time. And what's interesting about that is dividend stocks give me the ability to be able to own companies that are actually earning. And I'll say this over and over, when you buy a stock that is giving out dividends, that actually means that they're making money. That actually means that they're earning. That actually means that they have cash. Why would you be scared if the stock market is volatile, if the prices move up and down, if the company that you're actually buying is earning, but not just earning, they have enough earnings and cash above and beyond their expansion, above and beyond their operations, to be able to give it back to investors. I've been saying this over and over that if you want to get a template of good companies, look at the ones that at the height of the pandemic, they maintained their dividends. At the height of the pandemic, they even gave more. Some may have slashed it, but as long as they gave, I think that's something that's interesting. The whole context of this, though, is that dividend investing made it practical for me to be able to venture and do other things, because I still get cash flow from the companies that I own that give out dividends. However, what's interesting about that is this. It's predictable, it's relatively at least stable in my opinion, because I get to gauge what the dividend yield is. I get to look at it already. As long as it satisfies my dividend yield, then it becomes a bonus for me. If you've been watching my older videos, I would always talk about Globe, PLDT, REIT, Meralco, SPC. If you look at those stocks from Globe, from PLDT, from REIT, from Meralco, and even SPC, all those five have gone up significantly from where they were in 2020, 2021. They're a bit higher already today. And since they're a bit higher already today, that actually means that your dividend yield would suffer. But also it causes a template also for a lot of people to actually see that if you're a dividend investor, the lower the market is, the lower the stock price is, the bigger your chance to get capital appreciation. But not just that, your dividend yield would be somehow relatively stable, or since you bought it lower and they give higher dividends in the future, your dividend yield would also be higher. Now that being said, if you revisit Globe, from the time we've been talking about it also, their dividends have been stable. They have been giving out dividends regularly, but above and beyond that, the stock price also went up. So Globe did that, PLDT did that, SPC did that, REIT did that, Meralco did that. There's a trade-off for that. If the prices go up, if you're watching this April 2022 and you're just gonna buy right now, or if you've bought before and you have cash again, the buy price for all of these, from PLDT to Globe to Meralco to SPC to REIT, it's more expensive. You do remember REIT went as high as 50, Meralco's at 300 plus, PLDT's at 1,800, Globe even hit 3,500. It's relatively lower now at the 2,500 level. SPC is one of the best ones because it has continued its upward move, somewhere around 14, 15 now. That being said, the stock prices are higher. So if you don't know, one of my rules for dividend investing is it's important for me that the stock that I'm buying and the dividends that they're giving should be at least around 5%. That's my main rule. If it's not about 5%, then I don't want to buy it. Even though I love the company, even though I believe it, I'm not gonna buy in it because the acquisition cost of me purchasing it at a certain price is highly important, because it will determine my upside later on. But above and beyond determining my upside, it will also determine the dividend yield that I'll get. So if you try to compute it, the dividend yield of Globe right now is below 5%. The dividend yield of PLDT right now is below 5%. The dividend yield of REIT right now is also below 5%. The dividend yield of Meralco right now is also below 5%. SPC is the only one, at least from the 5 that I've normally been talking about, that is way above 5% and it has been very, very consistent in them giving out dividends. What does that mean? Does that mean I'm gonna sell my current positions? Not really. Primarily because some of them, or a lot of them, were at lower prices. And since they were bought at lower prices, then it actually means that my dividend yield still is above 5%. I'm not gonna be pressured because my acquisition cost is lower and the dividend yield that I will get for them still above 5%. It just actually means right now that either I look for other stocks that will give me higher dividend yields, either that, or I just continue to stack cash so that when there's a drop that may happen and it's above 5% already when I start computing my dividend yield, then I start to put it back on. With the exception of SPC, which has a dividend yield that's attractive for me, all of the other ones, I may have to be more patient and actually wait before I start to buy, before I start to stack once again, and before I take the time to be able to add to my current positions there. So while that's happening, you may actually ask, so sayang naman. Sayang if it's in cash and it's not doing anything for you. That's true. However, what I value more is to be strategic and buying it at a price where it becomes advantageous for me over the long term. The dividend yield that I will get for it is way more important for me, and the possible upside that I will get should I buy it low is way more important for me than being at a rush. And that's what I've been saying over and over, that in the world of stock investing, discipline is way important. It's also about buying low, selling high. But how do you buy low and sell high? It's being disciplined that if nothing is happening, if it doesn't hit your buy price yet, then you don't have to do anything. Then you don't have to transact. Then you don't have to buy and sell, or you don't have to actually do it. Not because it's something that you like, you enter quickly. Please do remember, in the world of stock investing, it's all about buying good companies at a good price. And that good price for me, at least from a dividend perspective, is something that I could get at least 5% dividend yield. That being said, 2022 update, my goal is to still look at those dividend companies that I like, but wait for them until they are relatively better, relatively cheaper, and they are at a point where I could get them at a price where the 5% dividend yield would be hit. So please do note that you could explore other dividend companies because there's a lot of them also, and I've had a list about them from DMC, SEC, and you have other REIT companies also, which I haven't said this enough also, that a lot of the REIT companies that were attractive, that were good in 2020, 2021, since they also have gone up from MREIT to RCR to PhilREIT, then your yield also is relatively lower. I think from those three that I've mentioned, PhilREIT is the one that's something that has a relatively higher dividend yield, and that's why also maybe looking at CREIT, which is exposed to renewable energy, something that's relevant because it doesn't just expose you to something that's good for the long term, it also exposes you into something that will give you a higher dividend yield as well. So that could be another option, that if the ones that you really like aren't really going down anymore and they're holding its value, then you can explore other stocks that could give you a dividend yield that's actually higher. Then you can explore other stocks that could give you a dividend yield that's actually better, and then just repeat. So my style for dividends is simple. If the stock that I want is at the dividend yield that I like, I buy, then I just hold and I just collect the cash flow that I get from dividends. If there's capital appreciation, it's a bonus. But if there's capital appreciation, it actually means that at a certain point in time, they would increase also the dividends to make it catch up to the dividend yield that people are actually getting for those that are buying it at that particular point in time. Stock investing doesn't have to be complicated. There's a lot of parameters to look at when you're investing in the stock market, but you just have to use what makes sense to you. You just have to make use what works for you. You just have to make use what is something that no matter what everyone else is saying, but it doesn't make sense to you, you disregard that and you just focus on the ones that really work for you. If you want to know more about that, links are in the description below for my books. Links are in the description below for my webinars. Check it down below. But all I want is just for you to learn. All I want for you is just to have the right conviction when it comes to investing. So I guess that's it for now. This is marvingermo. I hope this video helps you trade well, stay strong, stay smart. See you all again soon, and God bless you all.